we're extremely excited. This agreement was great news for us, but perhaps even more important news for shareholders now is that we'll have the drill bit turning and be producing results. And this project has put out just some killer holes over the last few years. So we're anticipating that we'll extend mineralization to the north and have great news to be reporting over almost continuously for the next year and a half.
Thanks as always for tuning in. Today I got to sit down with John Black. He's the CEO of Regulus Resources. If you weren't aware, Regulus is a copper and gold focused explorer located in the northern part of Peru. Their flagship is the AntaKori copper gold project. The big news that we're talking about today, as announced on October 1st, is that Regulus entered into a major transaction with Osisko Gold Royalties. The result of that transaction has given Regulus an immediate cash injection of $12.5 million and reduced their existing royalty burden. We sit down with John to discuss the deal, the strategy behind it, how we got it done, and what benefits that it brings to both Regulus and Osisko Royalties shareholders. If you enjoy this video, as always, we appreciate you hitting like and subscribe. You'll find some timestamps below if you scroll down the page. Enjoy the video as always. Let's get to it. So, good morning, John. Thanks for joining us. It's good to have you back on the show so soon. We had you here not too long ago. Brandon was interviewing you, but obviously some big news at Regulus to share. And I thought it was important that we had you back on to discuss this. So, appreciate you coming back in so soon to talk to shareholders about this.
Thanks, John. Yeah, we knew this was coming when we last talked with Brandon, but couldn't say anything about it. So it'd be great
Yeah.
to let people know what we've done here now.
Yeah, I figured. So I want to start by quoting, I think it's very notable what Sean Rusin, the chief executive officer of Osisko, said, and they were the counterparty to this agreement. But I think it's very notable. I want your reaction to it. So I'm quoting him partially here. Through this investment, we have a unique opportunity to gain exposure to one of the largest and highest grade undeveloped copper gold projects in the world, located in a premier jurisdiction, and to work with a management team with a proven track record of delivering world-class results. Now, that is what I call a very strong and glowing endorsement. How does that make you feel as the CEO? Obviously, you've been working hard to grow this deposit and the company. That has to feel pretty good to hear such a
No,
glowing endorsement.
absolutely. And we've known Sean and his team for a long time and have often kind of kicked around ideas on how we might be able to work together. We're very closely aligned on our philosophies on how to move projects forward. That drill bits really are where the value is added on projects. And so we couldn't think of a better team to form a partnership. And when we speak of this agreement, we use that word partnership. That's how we view this relationship going forward.
Right on. And how long was this in the works? Like, obviously, this is not something that you come to overnight. Like, how long were you working on this, and who approached who when it comes to initiating these talks?
Well, this is really the result of about 18 months worth of work in this direction. And it started when a number of the royalty companies were approaching us to learn more about the project in general. And much of the credit really goes to Adam Greening, our VP Corporate Development, who conceived of the idea that perhaps there might be a way we could interact with the royalty companies and still reduce our overall royalty load, which is one of the unique things about this agreement. So as we fielded those inbound inquiries from those, we realized that perhaps we could put forward a proposal very similar to the agreement that we've arrived at and present those to the royalty companies. So we ran a soft process. We had about 15 royalty companies interact with us to take a look at it. Surprisingly good response from one surprise was how many royalty companies there are. There are quite a few out there now, but we got very good engagement from quite a number of those royalty companies. And Cisco emerged as, for a number of reasons, is clearly the group that made the most sense for us to work with.
That's great. So let's try and unwrap the deal a little bit, because there's
Mhm.
probably some people out there, shareholders or not, or even people that are considering taking a position in Regulus, that might be a little bit, the language might be a little bit confusing to them. So could you unwrap a little bit of the key components of the deal and maybe talk about the strategy behind it?
Yeah, absolutely. Let's start at the highest level, what the deal means to us, what this agreement or partnership means to us. And there are really three critical benefits to Regulus and Regulus shareholders on this. One is that we receive a very substantial amount of funding into the company, and it's non-dilutive. We didn't issue shares for that. So it's $12.5 million US or 16.5 million Canadian of funds that come into Regulus without issuing shares for that. So that's a non-dilutive financing, if you will, that provides us with cash, which allows us to drill aggressively now. It removes that burden of potential having to finance and look for additional funding to move forward. At the same time, we're in kind of a unique situation on this, is that we're actually reducing our overall royalty burden. So this agreement allows us to purchase royalties, extinguish half of the royalties, and the other half gets transferred to Osisko royalties. So we put the royalty into good hands, a good solid partner on this, and we reduce the overall royalty burden. And then the third real benefit to us is that we receive that technical endorsement. The one of the things we've noted as we've interacted, we currently have quite a number of companies under confidentiality agreement reviewing the project. And when a major company goes under confidentiality, they dig deeply into what we have. And they're the groups that probably do the best due diligence are really the royalty companies. And it's primarily because if they're going to advance funds to us to acquire a royalty in this sense, they need to have confidence that this project will be able to become a mine. And so they're not only just looking at the quality of the project, they're looking at the time frame to when it'll be developed. So that endorsement is very, very strong endorsement for us going forward. So those are the real key highlights. Non-dilutive injection of cash to the company to allow us to move more aggressively, reduction of our overall royalty load, which improves project economics, and a strong endorsement from a fantastic partner.
Yeah, I like when I first saw the royalty deal when the news first came out, I thought, wow, this deal is great. Like it's you get the cash, you reduce your royalties. Like it seems like a huge win for Regulus. And I was actually quite surprised by the market reaction. It seemed like kind of a muted reaction, and maybe that's getting lost in some of the overall macro stuff with copper volatility and overall market volatility. But I thought, wow, like this is a great deal for Regulus and what a win. So,
It it is absolutely for us, and it may take a little while for it to get absorbed. We've had very strong response from the analysts. I point people to the coverage that's been put out for us in the past week from the three groups that provide coverage for us, and as well as just commentary and other formats. Many of our shareholders are really pleased with how this goes forward.
so were there any price target raises from the analysts on this, John?
Actually, Paradigm raised their price to 245,
Okay.
and Canaccord confirmed theirs at 275.
Okay. Yeah, I don't see how you don't like the deal. I mean, I don't see there's anything not to like here. If you're a shareholder, you've got to be pretty happy with this. I know what part of the language in the deal you have done a transaction already on the Mina Volare claim at your project. Um, the 12.5 million US that you received from Osisko,
Mhm.
the 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 cost of what Regulus had to pay to buy that royalty is that, do you have to subtract that from the 12.5 million when taking into account how much cash is going towards the company?
No, we don't. So that 12.5 million, as part of this transaction, we had already acquired one of the first pending royalties out there. That acquisition happened a little while ago, and so it reflects in our June financial statement. So we'd already paid for that. So all of the 12.5 million is net to us now.
Okay.
So it might be a good point where we can talk about the agreement from the Osisko royalties. I've mentioned what it means to us, but it's important for us to describe what it means to them and why this is a win-win agreement, which is what we always strive for in these situations. So Osisko royalties is paying us $12.5 million US. And for that, they get certain rights. And the principal right that they get in the agreement is that they have the right to acquire up to 50% of any royalty that we acquire from our 100% owned claims. So if we acquire a royalty, they can acquire half of that royalty. We will eliminate or extinguish the other half of the royalty. That's how we reduce the overall royalty load. And to do that, they pay 75% of the acquisition cost. So they're helping us, they're paying a bigger burden of the acquisition cost to come in. And as part of this transaction, we and what made this really work is that we already had the first acquisition of a royalty in sight. There were 6 royalties on various individual claims within the property group that we have. And the Mina Valari claim had a royalty that was a 3% royalty over a portion of the claim and a 1.5% royalty over a smaller portion of the same claim. We purchased that for $750,000, which, and as part of this transaction of the 12.5, 75% of that $750,000 is attributed to their portion to help us pay for that claim on it. So, but we'd already paid that; it had already been reflected in our books, so it's effectively reimbursement to us. So all of the 12.5 is net cash to us to be
Mhm.
able to apply towards drilling and acquisition of new surface grounds and social projects that are we're working with the communities in the area to maintain our social license. So that was one of the principal benefits that Osisko received. They also received 5.5 million warrants,
Mhm.
and those are important part of the agreement. It's part of what Sean and his team have done as a strategy in many projects over the past few years is participating, or at least having the option to participate in an equity position as a way to perhaps partially finance their acquisition cost of the royalties. And so those are priced well for us. They're priced at 225, so they're well over the market. It's a great future financing mechanism for us in those. It's non-dilutive immediately. There are no shares attached with that as upfront. So it's a placement that they have to if as the project moves forward as we believe, and they're recognizing that they believe the same viewpoint that we have is that this as this project move forward, those warrants will become valuable and perhaps effectively finance their acquisition cost of the royalty purchase. So they have a potential for a win-win in that situation. And then finally, there are various rights of first refusal rights attached to parts of the agreement for future downstream. And those don't jeopardize the value of the project or our ability to transact the project with anybody else. So we're quite pleased with it. And overall, what we really like about this is that it's a great agreement for us and it's a great agreement for Osisko. And so that those are the type of agreements you seek.
Yeah, absolutely. I guess if both sides are benefiting largely from this win-win situation, you can't get any better than that. And they're clearly making a bet that AntaKori will become a mine, will be put into production at some point. So their 225 warrants could be a big payday for them down the road, obviously. And like you said, either
This
cover their
strategy,
cost or make money from that.
this strategy's worked well. For those of you that know the Arizona mining deal that happened a few years ago, they participated in a very similar manner to that and did very well on that transaction. So we think that they recognize the potential for our project and Regulus to repeat that type of success for them.
Right. And it might be worth, Wes, could you bring up figure one? I just wanted for anyone curious what exact area of the project is the royalty or this existing or the first transaction covered. And then so this is the overall your overall claims here, John. And then Wes, if you can move to figure two, that shows
Well,
the yeah.
yeah. While we're
So that
moving to that figure, I can point out that we own 100% of the red claims on this diagram, and
okay.
we have an option to acquire up to 70% of the pink block. The pink block, we refer to it as the Koki Rumi agreement. Koki Rumi is a subsidiary of Buenaventura. So if we complete 7,500 meters on that, we can earn into a 70% interest in that block. And then Buenaventura has certain clawback rights if they want to exercise those. So this agreement applies only to the red claims. It does not
Only to the
apply
red
to the pink
claims.
block.
Okay. So we can clearly see here on this map the Mina Volare claim. So this is the claim that was covered under the initial transaction with the agreement with the Cisco. So we had a 1.5% NSR royalty and a 3% NSR royalty, depending on where you are on the block. And then that's been reduced to by half now to 0.75% and 1.5%. That's correct, John?
That's correct. And as we can see, the Mina Valari claim is in the center of the conceptual pit that constrains our resource. So the resource that we put out last year that had 250 million tons of indicated resource and 267 million tons of inferred resource, that resource is only on the red claims and only inside that black line of the conceptual pit. And currently, as our resource stands today, a substantial amount of that resource is on the Valari claim. It's fairly well drilled out. It probably won't increase in size, but it has a nice starting point on it. But it's only a portion of the overall deposit and only a portion of our portion of the deposit as well.
Okay. And Wes, can you go back to figure one? Um, just Yeah, so that provides a more clear view. So as you said, John, just to reiterate, all the parts in the red color, these are the potential areas where you could the deal with Osisko would have an effect where Osisko could come in if Regulus were to purchase the royalties on some of the other red claims, then Osisko could exercise their right to acquire those
That,
royalties.
that's correct. And there are
Yeah.
about five remaining royalties. Some of them apply to only one claim or only a couple claims on this. The maximum royalty remaining is 2%. The 3% Volari royalty was the most significant one,
Mhm.
but these other royalties will have potential value in the future. They don't overly burden the project by any means at all right now. It's probably not something that we naturally would seek ourselves on this. It's really more for an eventual operator. But with a partnership with the Cisco now and the fact that they help us on the cost to acquire those, it might make sense for us to move forward. It does make sense for us to move forward and pursue some of those at reasonable costs. We'll be looking for something that makes sense for us and makes sense for the holders of those royalties.
Right, and are for the holders of those royalties, are there existing, deals in place where the terms of purchasing those royalties are set out already, or would it be up to negotiation?
Most of them are up to negotiation. One of the royalties does have a cap on it, and that can affect it. It minimizes the overall value of it, but there's still a discussion on what its value is today versus when it would go into production.
Okay. Well, I wanted to make sure we touched on the impact to the balance sheet for you,
Mhm.
because obviously this is huge. A 12.5 million US dollar cash injection. So by my math, as of your last financials, Regulus had about 4.5 million in the bank. So probably towards the end of September, I'm assuming you were probably sitting around 4 million. Um, you've now had this cash injection of $16.5 million. So I'm guessing the company is now sitting close to 20 million thereabouts in cash. How much had you originally budgeted for the phase two Joe program at AntaKori? And did you think before that you would have had to finance to complete that, or was that sort of covered by that 4 million or 4.5 million that you had in cash?
Well, when we look at a program like our phase two program, we typically anticipate that we'll spend about $20 million a year when we're drilling aggressively with 2 to 4 rigs on a program like this. And a significant amount of that is to direct drilling costs. But keep in mind, we also have other costs acquiring additional surface grounds that kind of pave the way in front of us as we're drilling on. And then at the stage this project is at right now, it's very important that we're clearly working with the local communities to provide benefits to the communities. And so that opportunity is the way we look at it is increasing as the project is more clearly destined to become an eventual mine. It makes more sense that we are providing additional benefits to the communities, and that makes sure that the communities understand the positive impacts a project like this can have on them in the future. So about 20 million Canadian a year is a typical budget when we're working aggressively on a project like this. When in late 2019, as we set up for this year, we raised $10 million. We raised about half of that for this program, and the reason we did that was as our share price was low at that point, and we didn't want to do an overly dilutive financing to raise that entire amount of money. So we raised enough money to get started, but we didn't have enough money to complete our phase two program. We had the further complications with the delay to COVID. As we were set up to begin our phase two program in March, COVID hit, and we've now had 7 months when we haven't been able to work. Drilling we're setting up right now to get the drilling started in the next couple of days and go back to it. But that means that we knew we would have to raise some additional funding to complete the full phase two program. And effectively, we've done that with this agreement, that and a little bit more. So we're in a great position right now to complete our phase two program, to ramp up our activities, to work with communities in the area and solidify our social license in the area. It's at a time when the mine next door is like many mines in Peru, they're operating, but they're under pressure on how they can operate with the COVID restrictions, and so that restricts their ability to help with the communities. And we're happy to feel that now we can kind of step up and carry our load of that in terms of working with communities, providing employment, providing clean drinking water, other things like this for the communities they're really important in these mountainous areas that have kind of remote communities that don't receive a lot of support from the federal government.
Right. So kudos to you guys for being such a great community player and providing such support. That obviously shows a lot of what I would call long-term vision. You know, some people might balk at the cost, but the fact that you're thinking about this long term, you know, you're going to be part of the community, that this is going to be, the mine is going to provide good jobs. I mean, that's obviously a long-term vision, and I think that's going to pay off very well for Regulus in the on the long run. When I did some of my math, I mean, I went through some of your financial statements, and it's interesting with this, you know, the 16.5 million injection. You know, if you take into account, you have some warrants coming up for expiry in this or January of next year, I believe, at a dollar 60. And if all those come in, that's about 6.8 million injection. And you know, the share price trading today, I think around a dollar 50. So you're really not far off. So assuming, you know, when the drill program starts to get going and you have some success at Anta Norte, you know, conceptually we could see the price higher than that warrant strike price, putting those warrants in the money. So having that 6.8 million come your way, and then you have some more warrants a little bit higher, I believe, at a dollar 70 strike price. Uh, and I think the math comes in on that one around 9.2 million. So again, conceptually, if the results at Anta Norte are positive, your share price is up. That's another 9.2 million in your pocket. So combine that, 16 million approximately. Um, Plus the Osisko warrants, I think that's about 12.4 million. Those are good for 3 years. You know, yes, they're priced at 225, which is a bit higher than now. But again, assuming some drilling success, those potentially come into play. I'm just wondering, John, does it look like you don't have to finance the company anymore? Like, you know, assuming or considering the warrants that are in play could come into the money, that money would come into your treasury, obviously. Regulus might not have to go back to the market again to finance based on this, potentially.
We can't control exactly how the market will go on this, but we do know we're onto a very solid project, and we're getting increasing awareness of that. So I agree with you. We're watching that closely, and that is one where very likely outcome is that we'll be able to advance the project now without diluted financings.
Yeah, and that's amazing news. If you're a shareholder, that's got to excite you. And if you're looking at, you know, looking at Regulus as an investment, and you know, all exploration companies, all development companies take dilutive financing. It's that constant financing cycle where, you know, you drill and then you're trying to raise money, and it's kind of a pain in the butt, really. And the fact that you might not have to worry about that, that's got to be a big plus for Regulus.
It's
I
a
would
big
think.
plus, and probably just as importantly for us is it allows us to move the project forward more quickly, because
Mhm.
we this project has some natural timelines to it in many ways. Keep in mind we have a portion of the deposit, and the same deposit extends on to our neighbor's ground, which is the Comalaiche joint venture. And they're mining the oxide cap over their portion of the sulfide deposit, but they run out of oxides in about 2025. And which is a great setup because it means has potential to be a brownfields transition into a mine, and a timeline to make that transition in. It's the easiest thing to do is to move from a medium-sized oxide mine into a much larger copper gold sulfide mine. Permitting's easier, the social impacts are better if one mine doesn't stop and then you start again. And so with that timeline in mind, and We've seen historically high gold prices now, and we like many people believe that we are set up to see future copper price increases as well. It's a great time for us to be delivering this project, but it's important that we're moving the project along quickly. So we're excited. The drill rigs are in camp and moving to site this week. We're prepping pads right now. We should be drilling by this weekend. We'll put out a notice just as soon as we have rock in the box with the drilling on this. But getting back to drilling, it'll probably be continuous drilling now. We'll complete our phase 2 program, and with the funding we have in hand, it's quite likely that that just rolls into phase 3. With what
Right.
phase 3 will be is the drill off of what we find in the scout holes to the north in Anta Norte in phase 2. So we're quite excited to get this project back on the map and not to be constrained by having to seek finance or worrying about where that next financing is coming from.
So, just speaking of Norte, John, just maybe in for one final question
Mhm.
regarding the royalty structure. I know a lot of people are kind of excited about the potential of Norte. Does the Osisko royalty deal involve part or whole of the Norte area that you'll be drilling?
Okay, what I can do is I can refer people to some videos that are on our website where Kevin Heather, our Chief Geologic Officer, walks through the whole AntaNorte target so you can get a better idea of the technical aspects and why we're so excited about this project. But the AntaNorte portion of the AntaKori project is the northern portion of the project. But it's an area that we've not had access to because until this year we didn't have a permit to allow us to move in. We received that permit right at the start of the year. We're just set up to get ready to go, and we've had to have a bit of a pause with COVID now. But beginning this weekend, we'll be back on drilling and working into that area. And the area is partially on 100% ground owned by ourselves, and it's partially on ground with the Koki Rumi ground where we can earn up to a 70% interest in it. So some of the ground in the central portion of what we refer to as Anta Norte, the Osisko deal applies to that. The Koki Rumi ground is a separate transaction. We don't own 100% on that, and so the Osisko agreement won't apply to any portion of the Koki Rumi agreement. Just to refresh people's memory on that agreement, we can earn a 70% interest in that ground by completing 7,500 meters of drilling. We've completed a little over 2,000 meters to date. Once we completed 7,500 meters and notified Buenaventura that we've earned 70%, they have a one-time option to claw back to 70%, leaving us with 30% by paying us US $9 million. We would strongly prefer to have the 70%, but US $9 million is not a bad second prize on that as well, and would further cement our financial position going forward. So we
Absolutely.
anticipate with the drilling that we're starting right now is that we will hit that 7,500 meters very early next year and trigger that decision point for Buenaventura. So we're extremely excited. This agreement was great news for us, but perhaps even more important news for shareholders now is that we'll have the drill bit turning and be producing results. And this project has put out just some killer holes over the last few years. So we're anticipating that we'll extend mineralization to the north and have great news to be reporting over almost continuously for the next year and a half.
Yeah. Well, hey, that's congratulations, John. Just I'll pass my congratulations on to you and the team for getting this deal done, and congratulations to Osisko as well. It sounds like it's going to be a great deal for them. So, as you said, win-win, and shareholders can obviously look forward to the catalyst of drilling. So, exciting things at Regulus, and looking forward to having you back on in the not too distant future to maybe discuss some of your initial drill results. Hopefully, you have some real zingers that you can
Yeah,
talk about.
we look forward to that opportunity. So thanks for the opportunity to describe this deal a little bit better
Yeah.
and explain why we're so excited about it and how it sets us up well for the coming drill program.
Okay, sounds good, John. Well, until then, be well, be safe, and take care.
Okay, thanks.